Hey, good morning, everybody. Let's have a wonderful day of trading. Thanks for joining me. We're going to be talking about PPI numbers that come out at 8:30. We'll bring on CNBC, and we can all watch together and listen for the breakdown. Some updated stories this morning. Citigroup came out this morning, and we said we are not fully in a bull market yet, and the S&P 500 will retreat to 4,000. They didn't say maybe it will retreat to 4,000. Citibank came out and they said it will retreat to 4,000. Next, we looked at the fear and greed index. So, we thought, 72 was greed, 78 was greed. Now we're in extreme greed at 80. We haven't seen this level since February 1st. Does anybody remember what happened in February? We were towards the top of the market and we since went down. So let's talk about the 7 fear and greed indicators, okay? You've got market momentum. What's that at? Extreme greed right now. Stock price strength, greed. Stock price breadth, greed. Put and call options, extreme greed. Market volatility, that's neutral. Well, that doesn't really have that much effect. Safe haven demand, extreme greed. Junk bond demand, let's remember what junk bonds are, right? Extreme greed. Next, the Japanese market, 33-year high right now. The DAX, which is the German market, an all-time high right now. The NASDAQ, an all-time high right now. Does anybody see anything wrong with this? The markets are at all-time highs. Let's speak about Apple, okay? So you've got Apple, who came into a partnership with Goldman Sachs. They're offering 4.15% on savings accounts. Okay, so Apple's getting involved with banking now. Then you've got Apple coming out with buy now, pay later. Okay, I get it. Now they're infringing upon Affirm and some of these other companies who aren't going to get paid anyway because people will file, won't pay their bills. We've seen that with credit cards. Credit card debt is $1 trillion. People are paying 27% on interest. So Apple, to me, is pushing it. They've got the VR glasses out for $3,500. So Apple, one of them, what do they have? A $3 trillion valuation. All they're doing is adding extra revenue sources. Why are they doing that? Because of their extreme valuation. Let's just diagnose Apple a little more. Apple generally has most analysts with buy ratings, strong buy, outperform. Apple's actually has its worst rating out right now, meaning if you add up all the different analysts' rating, it's at its lowest level in a number of years, meaning that analysts are actually turning on Apple. And what is Apple doing? Apple's throwing out more products, more opportunity, more revenue sources. So I happen to think, Apple could be in trouble. Again, Japan's Nikkei average 33-year high, the DAX, all-time high. Now, here's my thought process. Today, what do we have? We've got the Fed coming out at 2 p.m. with either a 25 basis points increase, or they're going to say we're going to pause into July. The markets are supposedly like that. What's my plan for the Fed? I'm going to fade the initial movement. If the initial movement is a spike up, I'm buying puts. I'm going to ride it down. I like to fade the initial movement. That's been working for me. Okay, so here we go. 98% of the world is expecting a Fed hike pause. I'm in the 2% category that actually thinks they should raise another 25 basis points. Why? Because when we look at CPI numbers that came out yesterday, the housing portion of CPI, the contributing to CPI, went up 8%. Well, let's understand housing actually contributes to 40% of the CPI data. So whereas energy went down, food costs went down, right? Eggs are at their lowest price point in years. You should see my back office. I've got like 1 million eggs. I went and bought them all. I'm going to sell them when eggs go back up. That is a joke. Okay, next, TGA Fed balance sheet is now at 100 billion. There's still a ways to go because their goal from the end of June was to have their balance sheet at 435 billion. So understand, I still believe liquidity will be pulled in from the market. What do we got here? The U.S. 10-year versus the 3-month spread on interest rates. It's basically through the roof. A lot of people are predicting recessions coming sooner than thought. Let's see what else we got. Okay, here's an interesting one. Tesla is now the most shorted mega cap growth name in the stock market. $22.96 billion of Tesla is short, meaning that's about 3.47% of the float. Now, what other companies have large short interest? Apple right now, still it's under 1% of the float, but it has a $22.27 billion short interest. Microsoft, 0.66, so it's under 1%, $16 billion short interest. NVIDIA, over 1%. At 10.57 billion, Amazon just under 1%, and Meta at 1.31%. So understand, Tesla's short interest is 3 times as great as all these other mega stocks. Apple under 1, Microsoft under 1, NVIDIA 1.15. 3 times that is 3.45. Tesla is 3.47. So you have 3 times the short interest of NVIDIA into Tesla right now. I mentioned Tesla the other day. As the deltas turn positive, I expect Tesla to turn negative, and we've got Tesla with 13 straight winning days. Now, going back to 2020, when they were ripping all freaking year, Tesla up 5%, 6%. Still, you didn't see 13 straight winning days. All right, let's see if we can bring on CNBC. They should be dropping that PPI information shortly. Either that or Carlos is frozen right now, so I'm not even sure we're going to get that. Let's see if I can add it. Let's see if we can add it to the stream, see if it works. And
tenths of 1%, down 0.3%. And do remember, all the high water marks for producer prices on all levels were made in March of 22. The high water mark for this series was 1.6. Since then, this is the 1, 2, 3, 4th negative read that we've had on headline PPI. And minus 0.3, well, in March we had minus 0.4 to put some context. Up 0.2 when you strip out the all-important food and energy, as expected. And if you strip out food, energy, and trade, it is unchanged. Now, let's go to the year over year, shall we? PPI, final demand year over year. So headline year over year up 1.1%. That follows up 2.3%, up 1.1%. 11.7 was a high water mark in March of 22. So this has come down a long way. When was the last time we were at 1.1%? Well, I have a 2.5-year database, and it's prior to January of 21. So a nice low number, 2.8 when you strip out food and energy year over year. We're expecting 2.9. High water mark there was 9.7. And finally, if we look at ex-food, energy, and trade year over year, it's up 2.8%. We're expecting 3.1. In the rearview mirror is 3.4. And, well, 2.8% is interesting because that is the lowest level going back, and I may have this one, yes, that is the lowest level since February of 2021. So these numbers are significantly less than high watermark. High watermark there, by the way, 7.1%. So unlike consumer price index, we are coming down much more brisk, much faster. And 10-year note yields haven't moved that much from 380 to 379. 2-year note yields, 462. They were 463 prior to the number. But it isn't necessarily the distance traveled here as yesterday. The issue really is how the market ultimately and investors think about this number and what do they do for the next several plus hours. Yesterday, of course, we saw a big reversal after the knee-jerk reaction. And if we look at what's going on with the pre-opening equities, not a significant amount of change. We still see down futures down about 75, 80 points. Ultimately, today's Fed decision.
That's exactly the point I wanted to make, okay? PPI came in cool. CPI came in as expected. However, when you annualize the CPI, it's a lot higher than people are talking about. But let's talk about PPI coming in cool. So what should the psychology of the market do? Right? Everybody's buying calls. We haven't seen this type of call volume dating back to February's highs. And previous to that, we're going back 2 years till April 2020, which is right after the pandemic started, when the markets shot down pretty significantly. So talking about the psychology, we heard good information. What should the market do? Well, it should shoot up pre-market, right? That's what everybody's doing. We're in a bull market. It's a bull run. Why is the SPY only up 0.21%? Why are the Qs only up 0.21%? They were up double that 15, 20 minutes ago, right? Buy the dip. Everything goes up. Stocks only go up. Because as I mentioned when we started this live stream, we've got the fear and greed index, right? It's extreme greed at 80 right now. I'm just going to mention these again. Market momentum, extreme greed. Stock price strength, extreme greed. Stock price breadth, greed. Put and call options, extreme greed. Market volatility, neutral. Safe haven demand, extreme greed. Junk bond demand, extreme greed. So that's what's going on in the market. The market is not ripping like it probably should. Remember, people are waiting on the Fed. Now, people already know 98% chance the Fed is going to pause. That is what's baked into the market. 66% chance they raise interest rates a quarter point in July. Now, me, I'm in that small 2%. 2%, right? If I was to betting man, I would get a return of like 50 to 1. I bet $100. I get 5,000 if they raise it a quarter percent. So yes, I made a play for $1,000. I'm looking for that 50 to 1 return if they actually raise 25 basis points. Did I put my whole account in there? No, I set aside enough where I believe I will get a decent return if I'm correct. And if I'm incorrect, then I know what I'm risking. Always know what you're risking. Never risk more than your availability to risk. You know, I've seen people build up accounts, $250 up to $2,500. Their last trade, they're all in for $2,500 on whatever trade it's going to be. And they finally got one incorrect. They were 10 straight trades good, one trade bad. Where's their account? It's back under $100. So they started at $250, worked it up 10x to $2,500, make one bad trade, but because they don't do the proper money management skills, meaning if they bought 5 contracts each time, 5, 5, 5, that last trade, they're in for 55 contracts and they're over leveraging their account. So please stay clear of that. We can talk about a couple of different stocks. I already mentioned exactly what I'm expecting. Well, let's talk about the SPY today. Let's talk about the SPY. Let me see if I could bring up the dark pool levels, and we'll see if we can do that real quick. Let's add to the stream. What am I doing? I'm going on Discord. Anybody is more than welcome to join us on Discord. Myself, Love, Romeo, Carlos, B-Finger. Everybody's here as a family, as a community to help you. Now, I'm trying to find the ones that I looked at this morning, but a lot of people have been using this. Okay, there are the Qs. Here we go. Top flow. So what do I want to look at? Top flow, the most active calls and puts from yesterday. Well, if you see here, we got a ton of SPY, AMD, Amazon, but you're like, AMD is ripping up 3%. It's up 4 points this morning. What's going on? Hey, the Qs are up as well. Hey, Carnival's been up for a number of days. So this just tells me what options have a lot of volatility, meaning I can get in and I can get out. So those go, or a couple of these will go on the top of my list. I'll probably look at AMD, Amazon, Applied Materials. I don't think I want to play the Russell today. I might look at Microsoft or even Tesla. I mentioned Tesla 13 straight up days, so we're going to have to keep an eye on that one. Dark pool levels. Okay, they finally increased the dark pool levels. Let's just see where we're sitting with the SPY pre-market. Let me just find that chart for myself. All right, SPY pre-market. Here we go. 437.38. We're up about 0.16%. So what would I do? I'd go over to the dark pool levels. And again, I'm at 437.38. Just got to remind myself. So I look and I see, okay, it's not up here. I don't know what the dark pool levels. So what do? I look at the intervals, right? So I go 427.74 all the way up to 430.48. And I go, okay, that's about 75 cents, $2.75. And then I go, okay, what's another $2.75? Boom, here we are. $2.75. Okay, so I know that the next level up is going to be 438.70. 438.71. Okay, so I make a mental note and I'll even write it down. The next dark pool level is 438.71. So I know if the SPY is approaching 438.71, I might look for rejection. That's just an easy way for me to keep my eye on the ball as far as that goes. So that's the dark pool level there. I'll also check out the dark pool level for the Qs. And then I make mental notes and notes down so I know where the Qs could potentially reject. Now, what could cause the Qs to reject would be pulling liquidity out of the market. So people say, like, what the hell does that mean, pulling liquidity out of the market? Well, we look at the Treasury notes and the Treasury T-bills that are being auctioned off, right? 3 month, 6 month, 2 year. If they're paying me 5%, let's just use a nice flat number. They're paying me 5%. I'm a bank. I have to invest my client's money. I'm a bank. What am I going to do? If the 6 month T-note is paying me 5% and I know I can get that 5% annualized from the 6 month, what would I do? I'd pull money out of the market. Shoot, my NVIDIA through the roof, my Meta through the roof, my Apple through the roof, my Netflix and my Tesla through the roof. What am I going to do? I'm going to sell. What would selling do? put some downward pressure on the market. Again, it's a game of supply and demand. So again, me, I'm not going heavy. I wouldn't bet heavy with this market or against it. You know, Jim Cramer came out and he's like, oh, when the 2-year and the 6-month come down a little and the 3-month come down a little, there's going to be so much money on the sidelines that wants to flood into the market. First off, we've got the anti-Jim Cramer experience. So whenever he says up, it goes down. He says down, it goes up. He told me to live my best life. I'm assuming Jim Cramer's just telling me to die. All right. When I read something like that, he says, go ahead, live your best life. I'm like, no, he's telling us all to die. What is this guy doing? So anyway, I'm past that already. I'm anti-Jim Cramer. I'm going to look at a couple other stocks. Now, if you've joined me, June 1st, I could not stop talking about airlines. United Airlines, Delta Airlines. I even spoke about American Airlines, which is my least favorite airline. What have airlines done since then? Well, they've ripped up probably, let's talk about United Airlines, probably like 6 to 7 points. You're talking about a 13% move. We're about 12 for 13 trading days into June, maybe 12 days. So on average, the airlines are going up 1% each. What happened to Carnival Cruise Lines? Remember, I used to speak about Carnival all the time. I got screwed by Carnival a couple times because I saw the bullish momentum. And then, of course, there would be one day where they just sell the crap out of it. And I'm like, oh. So I just don't play Carnival anymore. But Carnival got a double upgrade the other day. They're buying Norwegian Cruise Lines. Me, if there's value in a play, then I could be interested in it. What did I get in? Again, I got in. Oh, look at this. We're spiking. I'm almost flat on the morning. Okay. Yeah. So the SQQQ, the opposite of tech, is spiking a little. So I'm still down 0.15% this morning. But again, I'm expecting liquidity to exit the market. I'm actually expecting the Qs to drop. I'm expecting the SQQQ to rip. I put a comment on Webull. Affirm, we all know buy now, pay later, right? I'm such a bear when it comes to Affirm, especially with Apple doing their buy now, pay later, especially with credit card debt hitting $1 trillion, especially with people that have credit cards are paying on average 27% and they can't afford their bills. So again, you know, if I want to be bullish a squeeze stock, it could have been Upstart. On the other side of that, if I want to be bearish a squeeze stock, it could be Affirm. Bullish a squeeze stock, I've mentioned Carvana a number of times. I mean, we see NEO ripping. Do you know how bad NEO's last earnings report was? From a week ago? It was terrible. NEO ripped higher from $7.50. It's probably like at close to $9 now. I mean, it's just, to me, it's just a little ridiculous. The Russell, the smaller cap stocks are still ripping pre-market again. So I'm going to watch all of them. They all should move together. We're not going to see small cap stocks rip higher and then the Dow and the S&P and the NASDAQ go lower. All three will work its way out. So what's likely to happen today? Again, I think we're going to see some chop. When I look at the range trading from yesterday, I'm looking at about 3-point range. So if I say something like, okay, let's say 438 on the high side, then I'm going to take 3 points away. I'm going to say, okay, we're definitely going to touch 435. We might even touch 434.63, which was the low from yesterday. So that's in my mind. And then again, we have the Fed information, the Fed dropping rate hike or no rate hike at 2 p.m. Then we have some verbiage coming out, and then we have Jay Powell answering questions at 2:30. So again, here's what I want to leave everybody with. Please be extremely cautious, because what do we like to see, or what do we generally see at 2 p.m.? We see a rip up. Then all of a sudden the market drops further down, like really bad. Then it rips higher again. And if you're in the wrong position and say you're in calls and you see it rip down, you sell your calls, and then it rips higher, you rebuy your calls, you're going to lose not once, but twice. So please come out with a strategy that you're happy with. Gamble or invest, however you want to consider it, with only money that you have to lose. Come up with your rationale. What's going to happen? If you want to be a bull, then you say, okay, no interest rate hike. Yeah, that should be good for the market. Market keeps finding new highs. The Japanese market, the Nikkei, all-time high. The German market, the DAX, all-time high. The NASDAQ, all-time high. We know that things hit all-time highs. They generally go higher. Me, I'm definitely looking for a pullback. So I'm going to leave everybody with that. When I look at certain things, I'm looking at Netflix to maybe give back a little today. Not really looking at Oracle, although it's my list. GameStop, right? GameStop came out with earnings. They skipped their conference call. What happened? GameStop tanked from like $25 to $21, lost 20%. Where is it now? Probably around $27. Well, it closed at $27. It's $27.10 this morning. So understand, the king of the memes, right? Ryan Cohn, what did he do? He purchased about 436,000 shares of GameStop. Now, he knows once this information becomes public, what's retail traders going to do? If Ryan Cohn's purchasing GameStop, Ryan Cohn, which is worth $1 bazillion, is purchasing GameStop. What is he purchasing? $8 million worth of GameStop? All these retail traders pile in behind him. So I just would like everybody to be cautious there. What did Kathy do? She sold some of her Tesla stock. Again, 13 straight up sessions. She started 2 days ago. She sold 400,000 shares. Yesterday, she sold 393,000 shares. What did she do past 2 days? She bought some Meta stock. Do I like that play? We can look at Meta. It had an outflow day yesterday. But again, if volatility is going to be pulled from the market, it's going to hit Meta, Apple, Amazon, Tesla. I happen to be, of all the big five, I'm a Google bear. I'm a Google bear right now. I bought some Google puts yesterday. We'll see how that works out. Oh, one last thing. Coinbase. Now, we know how Coinbase has been struggling lately. This came out over Twitter. Somebody with a pretty large following mentioned that they were attempted to be hacked by people that are trying to hack their Coinbase account. They got emails from Coinbase customer service saying their two-factor authentication is disabled and they need to re-up or reestablish that. It was a scam. A number of people got these emails. This individual that I follow reached out to Coinbase, was frustrated as can be on the phone with them, and just decided to separate himself from Coinbase. So I think Coinbase is in trouble because if people aren't as smart as this individual and they actually followed along with the two-factor authentication reset, then there's a good chance that their accounts have been hacked. Simple as that. So has that news hit the wire yet? No, it's just rumor, but I don't like that rumor. I don't like the SEC's attacking Coinbase, suing Coinbase, could be levying fines of $5 billion. Coinbase has a valuation of $13 billion. So what happens if they pay $5 billion in fines? Well, shit, their valuation should go down by about what, 36%. You take 30 for 6%, you're talking about a 16-point move. You're talking about Coinbase back in the 34, 35 range. So I'm not saying it's happening today, but I certainly expect Coinbase to go down. And I've been acquiring longer-term Coinbase puts at $54. Yesterday it was $52.50 I got in. Where are we at this morning? $52.80. So yeah, I mean, $54, $55. That's a good entry there. Tesla had a little pullback here. Again, 13 straight days. They're selling Tesla. All this spike up overnight for almost the entire market is not a surprise because what does the market like to do? Futures always like to turn green. Why? Because the market continues to go higher. Market doesn't know how to go lower. So I'm in the ballpark. I'm looking for the Fed to say 25 basis points, then say this to the market and the market to rip lower. So we'll see how that ends up. Have a good morning, everybody. Please, if you want to, join me on Discord. Romeo